Many of you have seen my video from Sunday, which is titled The Stock Market's Overvalued, and I believe the market is overvalued in general, but it doesn't mean there's no opportunities in the market. There's very few of them, especially when you go into the big stocks, into the big seven. A lot of them are extremely overvalued, but there's still a few buying opportunities. And one of those buying opportunities, in my opinion, at this price is actually Google, which is though it's up 17% year to date, it's down around 14% from 52-week highs. A lot of you know why this is happening. So antitrust lawsuit, which I'm gonna mention, I'm gonna talk about it, give you my evaluation model and many different things. So I really hope you enjoy this video. But I'm not really surprised that Google is getting sued for an antitrust lawsuit because 43% of the S&P, 43% is under investigation for some kind of monopolistic accusations or antitrust or whatever you want to call it. Not just Google, even Nvidia, United Health, Meta, Amazon, Visa, Microsoft, Live Nation, which I believe is valid for some kind of a monopoly on tickets, Kroger, and Apple, 43%. And the chair of the FTC is not stopping anytime soon. In fact, she's just getting started. She hints there's a lot more to come. So I wouldn't be surprised if in the future every company you own or 80 or 90% of the S&P is suddenly a monopoly. Absolutely ridiculous, but they did find Google guilty of whatever accusation they gave them. And that's why the stock is going down. There's a lot of different case scenarios that could happen. The first one and the worst one, and for a lot of people, is that they're considering potentially breaking up Google into different companies, different separate entities. And this could be bad. But if you look at my valuation model at the end of the video and you see what you're getting for 20 times earnings, you're going to know that Google separated will likely be, especially YouTube on its own, will likely be worth much more than if it was all within one entity. And it's been proven before. And if it does happen, although it's unlikely, I don't believe this is too bearish for Google shareholders. But the most likely outcome, and this is what the analyst said, the most likely outcome is the court will ask Google to do away with certain exclusive agreements, such as the one it has with Apple. And if you don't know, Google has an agreement with Apple. They pay Apple $20 billion a year for Apple to put them as the default search engine on the Safari browser. And this is the main point of the DOJ or the accusation that they had, is that there's not much or not many choices for people. That the default one is Google, and that doesn't ask them what would you like to use. Would you like to use Bing? Would you like to use something else? And if they do terminate this agreement, a lot of people think this is bad for Google. But I think it's more bad for Apple or worse for Apple than it is for Google because they're paying Apple $20 billion a year. And this would save $20 billion for Google per year, or 36% of what they earn from the advertising they put up on the Safari browser. But I still believe if that happens, a lot of people will keep using Google. Google has over a 90% market share in terms of the search all over the world, 90% market share. And once you get used to something, it's very hard to switch to something else. I mean, if you're using Google, try using Bing or try using Yahoo search. You'll be like, what's going on? Where's Google search? And it's so familiar with people that it's just a word right now. Like people say, I'm going to Google whatever, I'm going to Google it. They don't say I'm gonna Yahoo it or I don't know. It sounds weird. So it's so familiar with people that if they had the choice, I think most of them will keep using Google. So yes, Google might lose some kind of market share from that, or maybe from ChatGPT or whatever. But I will save Google $20 billion a year from this contract, or 36% of whatever they earn from the Safari browser anyways. So it's not as bearish as the market believes. But the reason why it's going down is because of the uncertainty, because we don't know what's going to happen. Will they break it up? Will they terminate the contract? Will they charge them 200 billion fine? What will it be? We don't know. And when something is happening that you don't really know, the market hates uncertainty and the stock starts going down. But those two case scenarios, if they break up Google or if they terminate the contract, I don't think it's as bearish for Google as a lot of people are claiming, and the stock is going down. But you don't only have, Google search, which is 56 or 57% of the revenues, but you still have YouTube, which not a lot of people talk about, 31 billion from YouTube. You still have the Google Ads business. You have Google Play, and you have Google Cloud, which a lot of people like to hate on. For the search business, as I said, over 90% market share. YouTube is the second largest website or social media site in the world with 2.5 billion members, 2.5 billion accounts on YouTube, right after Facebook, which is 2.9 billion members. It's absolutely stunning. But you're not only getting those two things, you're also getting Google Cloud, which it's been somewhat going up over time. It's been gaining market share, not as fast as Microsoft Azure. Microsoft Azure has been a beast, but Google Cloud has been steadily gaining market share from around a 7% market share. Now it's around 12 to 13% market share. This is not too bad. And the growth isn't as fast as a lot of people would hope for, because in my opinion, Google is mainly paying attention to profitability rather than just increasing revenues at any cost. And you could see it from the operating income on their latest earnings release. Google Cloud profitability or operating income went from 395 to almost 1.2 billion dollars. This is a massive increase in operating income for Google Cloud. So everything is heading into the right direction. And you're getting all those things with a company that has a 27% net income margin, very high net income margin, a company that's not done growing anytime soon. It's not a dying company. ChatGPT is not going to kill the business. Maybe it's going to slow the growth a little bit. It's not going to grow 32%, maybe like it did in 2024. But if it keeps growing 13 to 15%, this is more than enough to justify the current valuation. And the current valuation for Google is 20 times earnings. Even though ChatGPT and people like to make that drama, just like with HIMS. HIMS, they always talk about, which is a stock that I own, they always talk about, GLP-1 is going to be over because, NVO is going to gain market share, or they're going to stop selling them or whatever. But it's like 4% of revenues. And it's the same thing with Google. Google is so huge. And then they say, oh, ChatGPT is going to kill Google. Maybe 20 years from now. But it's not anytime soon. It's not. I don't think it's in our lifetime. Honestly, I think it's here to stay, and I think Gemini will ultimately be competitive. But at 20 times earnings, there's a lot of bad stuff that's priced in. There's a lot of negative sentiment, and I think there's more room for a surprise to the upside than a disappointment to the downside at 20 times earnings for Google in general. This is why I believe Google over here is one of the best buying opportunities in the market amongst the big stocks, the Magnificent Seven stocks, or mega cap stocks in general. If it does stay at this price, I would expect the return to be close to the earnings per share growth of around 14-15%. This is excluding multiple expansion. I wouldn't be surprised if whenever this antitrust stuff is over and the uncertainty is over, I wouldn't be surprised if Google gets back to 24, 25 times earnings on the mean. Not 34, 35 times, but around 24, 23 times. I wouldn't be surprised at all. So I think Google here is presenting a good buying opportunity if you're a risk taker, because you don't know what's going to happen with the DOJ. But in my opinion, there's more upside than downside from this valuation, no matter what happens, as long as it's not anything too extreme. And this is just my opinion on Google, not financial advice or anything. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.